Welcome to the Rise Seattle podcast. We are the podcast that is on a mission to help Seattleites rise above the gray and live their best lives. I am Tyler Davis Jones.
And I'm Adam Hested.
And we are the co-founders of the Rise Seattle Group. We focus specifically on helping people buy and sell their Seattle area homes. And today our focus is going to be talking about the real estate market. There's a lot of conversations going on. You're at the barbecue because now the sun's out and you're hanging out with people. You're hearing things on, the Seattle Times is writing about this, CNN's talking about it. And the number one conversation is how rates are going up and the market is stalling and it's falling to its death. Adam, did you hear that? Did you know that?
I heard the sky is falling.
The sky is falling.
It's already happened.
That's right. So we're going to talk a little bit about those specific things. So one in particular is going to be Fed rates. What's the impact of that? One is going to be more of a national 30,000 foot view. We're also going to discuss just supply and demand and how that's been impacted. We will then talk about whether or not it's a good time to buy or if it's a good time to sell. And yeah, that's what you're going to learn on today's podcast. So stick around for the entire thing because it is well worth it. To kickstart, Adam, why don't you chat a little bit about just the Fed rates?
Well, I think the thing that's most on people's mind right now, Tyler, is these interest rate changes and what's going on with that and what does that actually mean in the market. And I think you've got some good data to share with us about what happens during rate changes. But I did want to show this chart. I thought this was interesting because really rate changes have been happening. This is not an overnight phenomenon. Like we've been seeing this since, the beginning of March. And that's when the Fed we started to see some indication of inflation happening. The Fed raised a quarter point. And then, last week was the big half point raise. But in terms of mortgage rates, and kind of this is a big, this is kind of 30,000 foot level, at least for the Washington area. Those have been on the steady rise really for the last 3 months. And so this isn't a total shock.
For folks who are listening on the podcast and not watching our YouTube, what we're looking at, what Adam is showing us right now is a chart that's looking between like February 2022 to today. And, interest rates have just been on a steady increase since that time frame.
Yeah, good. Yeah, good. So I think, this isn't an overnight change. While it has been a fairly substantial increase since February, March, it's not like the Fed's rate change last week instantly changed mortgage rates. In part, those it had started to be priced into that and people were prepared for that. But it does have an effect on the market, and we're going to talk a little bit more about that. So,
got it.
Yeah.
Okay. So let's talk. Specifically, we understand that real estate is a local game, right? In fact, city of Seattle and Seattle metropolitan area, King County, we really didn't have an impact we weren't impacted by the bubble bursting as much as, the greater 49 states, so to speak, just because we have such a robust economy here, right? We have aerospace, we have space, we have tech, we have healthcare. I mean, we're relatively insulated when it comes to these types of things. But, we think that it's important to have a pulse on the national market. In fact, we've even helped many different clients help them transition and sell their place here in Seattle area and then move to other surrounding states using the Compass network. So we think it's one of the most powerful networks in the country to be able to match you up with someone who's very similar to us in their work style, who is a professional, who's going to take care of you, who's going to be data centric, and is going to ultimately use the best tools to get you the best deal. So our team,
we've been able to do it in New York, Bay Area, Nashville, DC, Arizona, Bellingham, Texas. It's been awesome.
Yeah, definitely. So That being said, if you do know someone who or yourself is looking to potentially sell and then turn around and buy, and you want a seamless experience end to end, making sure that you're not only selling your home for maximum price, but then turning around and purchasing something and getting hopefully the best possible deal and best possible representation in that market, send us an email to rsg@compass.com, and we will be happy to connect with either your person you're referring to us or to yourself and take you through our process. That being said, when we actually look at the national data, right? So I'm going to share my screen real quick here. So national data, can you see that okay?
Yep.
Excellent. So this is the total inventory. And for folks who are listening on the podcast, this is total inventory home sales in the US from July of 2015 to January 2020. Now,
homes for sale, Tyler, right?
Homes, sorry about that. Yeah, homes for sale. Correct. So in the last rate hike that we had, that was actually in November of 2018 to early 2019. That was the last time that interest rates were hiked at a relatively high increase. It was about one full point. During that time frame, we had 871,563 active listings in the United States, right? Now, interestingly enough, 2018 was still technically a seller's market, right? It was still,
for sure.
There were still multiple offers. Things were still going crazy. But nationally, again, we had 871,563 listings. Today, this is actually a little bit out of date. We're a little over 300 listings, but we basically today we have about 300,000 listings nationwide, right? So, and then last year at this low point, we had 357,000 listings. So the drastic difference when we're saying, oh, the market's correcting, what we like to say is like, we were going 100 miles an hour, now we're going 98 miles an hour. Like right. Realistically, you're not seeing a drastic change, because if we got to put our economics 101 hat on. I remember being in that class. I may have taken it twice. I don't remember, in college. But basically, supply and demand, right? When there is little supply and there's high demand, prices continue to increase. And that's what we're continuing to see, is even though potentially demand has decreased a little bit, we are so far away from having the actual supply to meet the need in this particular market. Another interesting point of data, I'll share this one with you as well. So this here was active inventory and projected single family homes. So again, we're around this like 300,000 price point. This pink line, if you're looking at this, again, if you really want to see these charts and you're listening on the podcast, please go and watch our YouTube. It'll be over at Rise Seattle Group on YouTube, and please like and subscribe. That would be wonderful. But we're seeing a trend where that's starting to increase. And the projections, we use this company called Altos Data, and their projection basically is that we're going to hit by around October, November or so, we're going to hit around 500,000 active listings in the United States. But again, fast forward to 2018, we were still at roughly 880,000 active listings. So we would need to double or triple, really, even to our current inventory levels that we currently have. We would need to triple that in order to get back to a somewhat balanced but still seller's market that we experienced in 2018.
Yeah.
So
yeah, I mean, we still, no matter what, we still have an inventory issue. That's what you're saying, right? Correct. So, and let's just talk anecdotally here a little bit, Tyler, or from our experience in terms of like talking with our clients recently. I mean, I'm thinking of a couple different clients of mine who they still really need to buy a home. They are concerned about the interest rate hikes, but they are immediately adjusting in their own minds and in their own expectations, and saying, well, we still have a goal of buying a home. We still have to have a place to live. And our ability to buy has dropped a little bit, but it doesn't mean we can't still go find a good home to buy. And so, somebody who was going to spend 1.3 million might adjust down to 1.1, right? Somebody we've got a client, they were in the 1.8 buying range, and they're probably going to adjust down a little bit. They're talking now more like, hey, let's kind of cap it out at 1.5. Right. Because again, I think our advice when we were talking about this, like our advice hasn't changed, right? You still have to buy a good home, and you live in the payment of the home of your purchase. You don't live in the purchase price. So if you can afford a good home on a month-to-month basis with interest rates at 5 or 5.5%, then you should buy a good home that you can afford at today's interest rates. Like, it's just
one thing to point out too. So, oftentimes with first-time home buyers, they're just kind of wondering, why does it matter, right? Interest rates are going up. Why does that actually matter? If I have 20% to put down, who really cares? And the thing that you have to take into consideration is for every interest rate decrease or increase, so for every 1% increase or decrease, there's a 10% loss or gain in purchasing power. Meaning, if an interest rate drops a full 1 point, right, and you can afford $1 million, when it drops 1 point, you can now afford 1.1, right? When it increases 1 point, you can now afford $900,000. So that's the impact of this interest rate. And as you're saying, and as we're experiencing with our buyers, basically people are going, well, I still need a house, and a $1 million or $950,000 house is a lot better than potentially, a 1 point or not having a house, right? At the end of the day. Yeah.
Well, and like one of our lenders said the other day, they said either, in 18 to 24 months, like just think of it as right now, right? You just go, can I get in right now? Yes, I can get in right now. Well, in 18 to 24 months, either you're going to be saying, wow, I sure am glad I locked in at 5.5% or 5% because it's at 7 or whatever. And that's going to relatively look like a good deal. Or it could be the opposite, where, if inflation gets under control, rate increases will stop. And, who knows? I think the need and the demand for money right now, cheap money, is not going to go away. And that may pull down interest rates again. And you'd potentially, maybe you have an opportunity to refinance in 18 or 24 months, and then you're like, it was a little more expensive the first 24 months, but my payment actually just dropped. Wouldn't that be amazing? So I think, there's different ways to look at this, but I think there's always opportunity, right? And I think we're saying there's still opportunity in this. I think the other thing we've experienced, 2 months ago, there's 5, 8, 10, 12, 15 offers on every property. But, that's very different right now, right? Like we're seeing 2 or 3 offers on a property, and instead of going 25 or 40% over, although that is still happening too, I guess. We're just kind of seeing all over the map. That's the reality. But we're seeing a lot less competition.
Yeah, definitely. I think, and I think we're going to be talking about this here in just a bit, but, well, we can touch base on just number of listings that have decreased. Later on in the episode, but like the reality is, like, people have been listing at a pretty high rate, basing it off of the previous sales. And now that the market has kind of caused a little bit of a rift and people are starting to readjust, those people who have priced way too high, but priced, their neighbor went for 300,000 over theirs, and now they're listed 300,000 under, potentially, or they're listed maybe at that same price point. They're not necessarily getting an offer, and they're having to drop the price. That's not indicative that the market is dropping $300,000. That's indicative that just the market took all this limited inventory and pushed it up as high as they possibly could go, based off of low interest rates. And now people are starting to scale back a little bit, but it doesn't mean that home prices are decreasing.
Let's jump. Can I show that chart real quick, Tyler?
Yeah, yeah,
Because
of
I think
course.
that is an interesting one since you're talking about it. We do think this is one of the better leading indicators of the market. This is properties with a price decrease. And if you look, if you're listening to the podcast, you see a line with a lot of movement, kind of between 30% and 50% over the last couple of years. But then the last year has really been, 20% of homes have seen a price decrease. So it shows us a strong market, right? Relative to a couple of years ago, it shows us even stronger market over the last year because fewer and fewer homes have had to decrease their price in order to sell. And while the national average in a normal market is like between 30 and 40% of homes will take a price decrease before they sell. Right now in Seattle, the low was about 7% of homes. That was in February of this year. And that was probably one of the fastest moving markets we've ever been a part of. But we are seeing that bump up a little bit. Like, last week it was almost 15% of properties had to take a price decrease in order to try to sell. And this week it's 12, 13% of properties. So while it's not super significant and it's nowhere near, I think maybe you could look at it both ways. You could say, see, the market isn't slowing that much. Only 13% of properties have seen a price decrease, but you could also say that is increasing some, which we would expect. We expect to see that number continue to go up as inventory increases and we move into a little bit further on into the year.
Yeah. Well, but and you said though an average market is 30%.
30 to 40%.
So we're still at a 14% of homes being decreased, right? In the grand scheme, 85% of the houses that are going on market are either selling at asking, if not over asking price. And there's still I would assume, I haven't looked at this specific data, but I would assume still even today, the average over asking price, like the average sold price is still going over asking price when you look at the total. So again, still a seller's market. We were going 100 miles an hour. Now we're going 98. You can still die going both of those speeds, right?
Totally true.
Yeah. Here's another interesting thing. My buddy Matthew Gardner, who's actually been on the podcast before, he tweeted this out. Go and follow him, by the way. He's at M Gardner Econ on Instagram. So hopefully you can see this okay. So this was actually a tweet that he screen captured, and sadly I don't tweet that much, so I'm seeing this on Instagram. But this was a tweet that he had just yesterday, actually. He said, historically rising mortgage rates cause home sales, not home prices, to pull back. During periods where rates rose significantly, home prices still rose by an average of 5.2%. But sales decreased and new housing starts also pulled back. So what does that actually mean? Well, when we look at the data, this particular, he actually put together every time that there was a relatively large mortgage rate hike, he put together the number of home sales, so percentage of home sales, the percentage of home starts, which is new construction, housing prices, and then mortgage rates, right? So in 1993, so October 93 to 94, interest rates rose from 6.8 to 9.2%, while home sales fell, that's my Southern accent, sorry, 12.7%, and housing starts fell 12.6%. Housing prices still increased 3.5%. Jumped to June 2003 to June 2004. Interest rates increased roughly a full point. Housing prices still rose 10%. Jumping to September 2017 to November 2018, which is what we had just previously discussed, interest rates went from 3.8 to 4.9, so 1.1 point, basically jumped a full point, and housing prices still rose 4%. So if you are thinking that your housing prices are going to decrease as interest rates increase, the data is showing that that's not accurate. It really truly is.
At least historically that hasn't been happening.
Correct. Correct. Exactly. Now, we could have an economic recession of some
Right.
sort. People could lose their jobs where now they can't necessarily afford, these $1 to $2 million homes that they've just purchased. If that's the case, that could increase inventory substantially more, which provides opportunity for buyers who've kind of been sitting out on the fence. So I love Warren Buffett's quote, get greedy when others are fearful and fearful when others are greedy. And that's what we're telling our clients as well, which is, if you've been on the fence about purchasing, now is honestly there's opportunity out there, because there are going to be listings that sit on the market for quite some time, and you have an opportunity to jump in and get a deal. So
Yeah. And I think that speaks to, what's the opportunity for sellers right now too, Tyler, right? Because I think where we're seeing, not always, but often where we're seeing homes sit or have to take price adjustments are those homes that were not fully prepared for market and that were probably priced too high to begin with, right? Like they got a little bit ahead of things, didn't make an adjustment with the breath that the market's taking right now, and there you go.
yeah.
All of a sudden they're sitting.
Yeah,
And
no,
so
absolutely. I think, even looking at that data that you referenced of 14% of listings that are dropping price, most of those are listings that wanted to list high and they didn't want to do any type of work, right?
right.
And by work, I mean, you paint, you stage, it's vacant, it's cute, it's nice.
Yeah.
We have a program called Concierge that we leverage, where we're able to give upwards of $75,000 to a seller interest free, to do whatever they need to outside of fixing foundation and adding an addition. If you want to flip a bathroom or flip a kitchen, we can help facilitate that. And what we found is these nice turnkey homes are the ones that are selling for over asking price.
Yeah.
So, it's totally fine to sell a house as is, because maybe that's a little less stressful, but you could be leaving a lot of money on the table because you didn't do the updates that you could have done.
Yeah. And we're doing that over for every one of our listings: paint, carpet, flooring, kitchen updates, super clean, windows clean, roof clean, all, these things that are really actually really important to the buyer market right now, because
Yeah.
I think especially, contractors are hard to come by.
Mm-hmm.
And people know that. And if they're like, I don't know if I can buy a house, and then how would I get it painted, and how would I get the floors redone, and all these things that they don't want to do. They just want to move in, and people are still willing to pay a premium for that. It's like
Totally.
buying your fruit sliced already. You pay twice as much as if you just, bought a whole apple. It's like,
Yes,
it's
it's true.
it's
Oh,
like, just,
I like that analogy. That's so true, right? It's just, you have somebody, you're buying the convenience of not having to do anything and not having to live. And
yeah,
don't get me wrong, you and I both have lived through construction. It's not fun.
yeah, no,
So I understand. And I'm even actually, on the last podcast, I had said that we were writing an offer. Ultimately, we did not get the house. And now we've decided we're going to go up or do some type of major renovation on our house in order to make it what we want it to be. But I'm not looking forward to that. In fact, I think I'm going to have to end up renting a house whenever the construction starts for,
yeah,
a good part of a year, just to offset. So, it's expensive to do those things. It's stressful to do those things. It puts a lot of stress on your family, and on your
yeah,
relationships. So I'm
yeah,
not saying that you can't do it, but most of the time, buyers are just wanting something turnkey so that they can come home from their long day of work,
yep,
and relax. So
yep,
yeah.
yeah. I think there's a huge value. We're spending, I think, on average, like, well, between 15 and 25 or 15 and $30,000 per home that we prep for market. But we believe we're getting that back 2, 3, 4 times in the
Totally.
sale.
Totally. And
So
the more you invest strategically, the more you end up generating long term, right?
yeah,
And yeah, absolutely. You don't want to
no,
spend all willy-nilly, right? Like,
no,
you don't have to put gold leaf wallpaper up or anything along those lines, but just
right. Please
make it
don't.
look, yeah, please don't. But you do potentially need to to do some work to make it look nice. So,
Yeah,
well,
for sure.
I mean, I feel good about this conversation. Hopefully, hopefully our listeners have enjoyed it as well. If you do have any questions, maybe about what your house is worth, we'd be more than happy to give you a free consultation on what that looks like. Like I said, just reach out to rsg@compass.com. If you're interested in buying or trying to navigate what that looks like, we do buyers consultations all the time. We do no obligation buyers education days where we actually get to go and tour houses. We can connect you to the right lender if that's something you're interested in. Ultimately, we want to serve as many people as we possibly can. We love Seattle. We believe in it. We're the good news of Seattle, and we're here to help you navigate trying times. So the sun is out. We should go outside, Adam. I think
Yeah, let's do it.
Yeah, let's stop this
before it goes away.
Yes, exactly. Thanks for listening, Seattle. We love you, and we'll talk soon. Second.